I think we stop at e-stamping. E-stamping. That is where we stop. So we continue from there today. If you once we finish it on time, we move to another type of tax. We can talk about tax assessment in Nigeria, or we should talk about taxation of specialized business. So we stop in the area of e-stamping. We talk about what is e-stamping. We have discussed e-stamping. We said an electronic form of stamping a document. So when you generate the receipt online, you make the payment online, all the stamp duty, everything is done online, and the document is stamped online. That is where we stop. So what are the advantages of e-stamping? What are the advantages of e-stamping? What are the advantages of e-stamping? One of the advantages of e-stamping is it is very simple to prepare and easy to administer. It is very simple to prepare and easy to administer. So another one is it enhances accuracy. E-stamping enhances accuracy. It enhances accuracy. E-stamping also eliminates corruption through human involvement. E-stamping eliminates corruption through human involvement. And another advantage is e-stamping promotes voluntary compliance. E-stamping promotes voluntary compliance. Why the last advantage of e-stamping? It is cost effectiveness. It is cost effectiveness. So these are one of the advantages of e-stamping. What are the disadvantages of e-stamping? One of the disadvantages of e-stamping is it is not user-friendly to uneducated taxpayer. If you don't know how to use internet, how to use computer, if you don't know how to, you understand, how to fill a form online, you cannot use e-stamping. So you must be computer inclined before you can use e-stamping. So another problems or disadvantages of e-stamping is that the ICT infrastructure challenges of internet connectivity may affect e-stamping and can lead to loss of revenue. The ICT infrastructure challenge of internet connectivities can easily affect e-stamping and can lead to loss of what? Revenue. What this one means is that when there is no internet or the internet is not connecting effectively, there is a breakdown in the internet connectivity. You cannot do e-stamping. By virtue of that, the money that you're supposed to pay for government, the government cannot generate revenue. So for government to adopt e-stamping, that means the user must have a good internet facility, internet infrastructure in place. Without good internet infrastructure, e-stamping cannot operate. So another one is risk of being hacked using e-payment system. Once you want to use e-stamping, by the time you fill out the form, the e-stamping, while doing it, is going to take you to a payment gateway where you are going to make payments. So when you get to the payment gateway, if care is not taken, by putting your data, your ATM card, your personal profile, so some of some of internet fraudster may hack your information. They may use that opportunity to penetrate into your personal details. So these are one of the challenges or disadvantages of e-stamping. Another one, the challenges of transfer money between different e-payment gateway. The challenges of transfer money are Access Bank is a payment gateway. I want to transfer money to remitter. All these challenges, sometimes the transaction may be successful, but the remitter have not received the money. So all these challenges, it relates to e-stamping or e-payments. Another one, dispute of transaction failures. Dispute of transaction failure. This one too affects e-stamping. Dispute of transaction failure. Transaction can fail, and the fund of the user may have been, the account of the user might have been debited, and by virtue of that, for them to reverse them, it may take a longer days. So these are also one of the key challenges arising from this e-stamping. So now the next area we want to look at is called adjudication. The next area we are looking at is called adjudication. What is adjudication? What do you understand by adjudication? Adjudication means the process of determining the correct amount of stamp duties. The process of determining the correct amount of duties to be paid. This one is done by who? By Commissioner of Stamp Duties. The process of determining the correct amount of duties by the Commissioner of Stamp Duty is called adjudication. What correct amount of stamp duty you need to pay on a particular instrument? That process for the Commissioner for Stamp Duty to assess them that this is your stamp duty amount you pay on this document. That process is called adjudication. Now, what are the benefits of adjudication? What benefit do we tend to derive from adjudication? It shows that the document is genuine. One of the benefits is that it shows that the document is what? It's genuine. Another one is certify the statutory requirements. Adjudication certify the statutory requirements. Adjudication certify the statutory requirements. Another one is it make instrument. Once the instrument is adjudicated, it make it as what? As an admissible document. It make the instrument to be as an admissible document. So all these are what? The benefits of adjudication. Adjudication also helps us to resolve disputes. It helps to resolve disputes. So all these are what? They are the benefits of adjudication. These are the major area that we need to know on stamp duty, because stamp duty is also in advanced tax. Some of the remaining area on this stamp duty is for the advanced taxation. So the remaining area on stamp duty is for the advanced taxation. So this, I think, this is the major area that we need to know for our own level on these stamp duties. Now, let's try to look at some other topic we need to discuss. Today, we are going to look at taxation of specialized business. Taxation of specialized business in Nigeria. We want to look at taxation of specialized business in Nigeria. So this is one of the areas that we need to look at. Taxation of specialized business in Nigeria. Taxation of specialized business in Nigeria. So that is what we want to look at this morning. Taxation of specialized business in Nigeria. There are some businesses, some industry, how we tax them is different from the normal computation of tax. There are some steps and specific requirement as stated in the relevant section of the CETA on how we are going to tax some of these businesses, some of these companies, some of these industries. So it is clearly stated. So one of the specialized business that we have is called taxation of airline, shippings, and telecommunication company. Taxation of airline, shippings, and telecommunication company. How do we tax such a company? Taxation of airline, shippings, and telecommunication company. So another specialized business that we have is taxation of banks. Another specialized business that we have is taxation of banks. Another one we have is called taxation of insurance business. And we have another one called unit trust business and pension fund. Taxation of unit trust business and pension fund. We have that one too. We also have another one called taxation of real estate business in Nigeria. Taxation of real estate business in Nigeria. Taxation of real estate business in Nigeria. All these, they are specialized business. How we compute their tax is different. There are some provisions of the act that we need to follow while computing their tax. So there are some law that there are some guidelines that have been clearly stated on how we compute their tax. Ladies and gentlemen, for taxation of skills level, for our level, we just need to know this one, the first one. We need to know the first one, and we need to know the second one, the fifth one. Why part of the second one, half of it, we are going to know just half of the second one. So what we are saying in essence is taxation of airline, shippings, and telecommunication company. We need to understand that everything for our level, taxation of skills. Taxation of banks too. We need to understand part of it. Let's say like 50% of it. Why taxation of insurance business is not for our level? We don't need it. Unit trust and pension fund is not for our level. We don't need it. It's for the professionals, for the advanced staff. Taxation of real estate business too. That one is for our level. We need it. So today, we are going to look at taxation of airline, shippings, and telecommunication company. How do we tax airline, shippings, and telecommunication company? That is what we are going to look at this morning. All these airline, shippings, and telecommunication company, one of the unique thing about them is that they will have office in different countries that they operate. Airline, shippings, and telecommunication company, they don't operate in one country. They can be operating in more than 5 countries, more than 7 countries because of the nature of the operation. Take, for instance, airline company, I'm talking of international airline company. They will have office in Nigeria. They will have office in Ghana. They will have office in France. They will have office because they will be carrying passengers from one country to another. They will have office in those countries that they operate. That means they are deriving income from different countries. Likewise, too, shipping company, most of the shipping companies that carry cargo, some of them will carry cargo from Real Madrid to Nigeria, some from Nigeria to Argentina, from this. So they're operating in different countries. How do we know the tax that they will pay in Nigeria environment? How do we know attributable profit to Nigeria environment? This is what we want to talk about this morning. So for airline, shipping and telecommunication company, section 14 of CETA of 2004 as amended have clearly stated the guideline on how this airline, shipping and telecommunication company will be taxed. So it is been stated in the section 14 of CETA on how this company will be subjected to tax. Now, when we talk about their income, some of the income of this airline, shipping and telecommunication company that are exempted from tax, one of it is when you loaded a passenger or you loaded a cargo outside Nigeria, but that cargo is terminating in Nigeria. Take, for instance, income from passenger from France to Nigeria is terminating in Nigeria. The source is not coming from Nigeria. That income will not be subjected to tax in Nigeria. Another income that are exempted from tax, any income that pass through Nigeria environment, it does not terminate in Nigeria. The source is not coming in Nigeria, but the transit has to pass through the Nigeria environment. So that one too is a non-taxable income. Now, according to the guideline on how this section 14, how we are going to tax airline, shipping and telecommunication company has been stated step by step. We have the step on how we are going to tax them. So, but first thing we need to understand is if FRS want to tax airline, shipping and telecommunication company, FRS and the tax authority of the foreign head office of the airline and shipping and telecommunication company must agree on the basis of assessment in terms of basis of tax computation. What basis do we use to determine the profit of Nigeria environment? The foreign tax authority and the Nigeria tax authority must agree on the basis on how the profit of the Nigeria environment will be assessed to tax. They must also agree on the basis on how we are going to recognize capital allowance. In this question, airline, shipping and telecommunication company, capital allowance may not be given. But if capital allowance is not given, we are going to use depreciation given to us that we treated as a disallowable expenses to derive our capital allowance. Depreciation, we are going to use it to derive capital allowance. So capital allowance may not be given, so that we will use the depreciation amount to derive capital allowance. So what I'm saying in essence, the foreign tax authority and the Nigeria tax authority must agree. They must the Nigeria tax authority must certify that the basis used in tax computation of this airline and shipping company is in line with the provision of Nigeria tax, and they must agree with the foreign tax authority. If they are not certified with the foreign tax authority, if the company wants to be subjected to tax in Nigeria, the company will be subjected to tax on fair and reasonable percentage of the turnover derived in Nigeria. If the foreign tax authority and Nigeria tax authority does not agree, or Nigeria tax authority does not certify on the basis of tax computation of this company, in that regard, the Nigeria tax authority will assess the airline shipping company to tax based on fair and reasonable percentage of turnover. This is what we need to know. Now, the major area that we need to look at, what are the steps in computing taxation of shipping, airline, and telecommunication company? How do we compute this tax, the tax of this company, airline, shipping, and telecommunication company? How do we compute them? The way we compute them, we follow steps. There are some steps that has been clearly stated in the Act of the Company Income Tax Act. In the Section 14 of Company Income Tax Act, they state out this step that if you want to compute the tax of airline, shipping, and telecommunication company, these are the steps that you need to follow. You need to determine the global income. You need to determine what? The global income. Global income simply means the aggregate income of the company from all the countries that they operate in a relevant year of assessment. Global income means the aggregate income of the company from all the countries that they operate in a relevant years of assessment. We need to get the global income. This is the first thing that we need to do. We need to determine the global income in a relevant years of assessment. After getting your global income, the next thing you need to do, take for instance, example of my global income first. Income from passenger flown from Madrid to Nigeria. Income from passenger flown from Nigeria to Madrid. Income from cargo loaded into aircraft on other routes. Income from cargo freight from Nigeria to Madrid. Addition of all this income from all the countries that they operate, you add it together. That means my global income in this case is 33,457,850. You add all the income together. That is when you get your global income. When you get your global income, the next thing to do, step 2, is to determine the Nigeria income. The Nigeria income means the income in which the source is coming from Nigeria. From your global income, you can get your Nigeria income. Inside your global income, included in your global income, there are some income in your global income that are Nigeria income. The income that the sources are coming from Nigeria, they are your global Nigeria income. So let's say, for instance, this income of the global income in this step 1, which one do you think is Nigeria income among them? Which one do you think is Nigeria income among them?
Income for passengers from Nigeria to Madrid, the second one.
Okay. Which other one?
The fourth one. Income from cargo flights from Nigeria to Madrid.
Okay. So these two, the second is Nigeria income. Why? The third too, the fourth is also Nigeria income. So step 2, you need to determine your Nigeria income. Like this case, look at my Nigeria income is stated clearly. Income from passenger flown from Nigeria to Madrid, income from cargo freight from Nigeria to Madrid. Addition of the two is called Nigeria income. Step 3 is to compute global adjusted profit. Step 3 is to compute what? Global adjusted profit. How do I compute global adjusted profit? Global income less allowable expenses. Global income less allowable expenses. Global income, I will less allowable expenses. I will get my global adjusted profit. Global income less allowable expenses. However, there is another way for getting global adjusted profit. You can say my global adjusted profit is net profit add disallowable expenses. My global adjusted profit is net profit add disallowable expenses. You also use that to get global adjusted profit. So in essence, what I'm saying is there are two ways for getting global adjusted profit. First one is global income minus allowable expenses, while second one is net profit add disallowable expenses. That is step 3. Step 4 is to compute the global adjusted profit ratio. Step 4 is to compute global adjusted profit ratio. How do I compute global adjusted profit ratio? Global adjusted profit all over global income. Global adjusted profit all over global income. Global adjusted profit all over global income times 100 over 1. You get your global adjusted profit ratio. Step 5. Step 5 is for you to compute depreciation allowance ratio. Step 5 is for you to compute depreciation allowance ratio. How do I compute depreciation allowance ratio? If you want to compute depreciation allowance ratio, you are going to use depreciation amount in the question. Depreciation expenses, you are going to use it. Depreciation expenses all over global income. Depreciation expenses all over global income times 100 over 1. This depreciation allowance ratio, you normally compute it when you are not giving capital allowance in the question. But if you are giving capital allowance in the question, you don't need to compute depreciation allowance ratio again. But when you are not giving capital allowance in the question, you need to compute depreciation allowance ratio. And if you want to get your depreciation allowance ratio, depreciation amount, that depreciation amount in the question that you treated as disallowable expenses, all over global income times 100 over 1. You use that to get depreciation allowance ratio. Step 6 is for you to compute Nigeria adjusted profit. Step 6 is for you to compute Nigeria adjusted profit. How do I get Nigeria adjusted profit? If I want to get Nigeria adjusted profit, I will say, my Nigeria income times global adjusted profit ratio. So if I want to get Nigeria adjusted profit, Nigeria income times global adjusted profit ratio. Nigeria income times global adjusted profit ratio. I will get my Nigeria adjusted profit. After getting my Nigeria adjusted profit, the next step for me to do is to compute Nigeria capital allowance. The next step for me to do is to compute what? Nigeria capital allowance. How do I get Nigeria capital allowance? If I want to get my Nigeria capital allowance, depreciation ratio, the step 5, that depreciation ratio times Nigeria income. Depreciation ratio times Nigeria income. I will use that to get Nigeria capital allowance. Depreciation ratio times Nigeria income. I will use that as a base to get Nigeria capital allowance. Mind you, if the question gives us the capital allowance direct, we don't need to compute this. We don't need to compute this. But if the question did not give us capital allowance, we need to get our capital allowance by ourselves by first getting depreciation allowance ratio and use the depreciation allowance ratio to get Nigeria capital allowance. After getting the Nigeria capital allowance, after getting that, you need to get the Nigeria total profit. How do I get the Nigeria total profit? Nigeria adjusted profit less Nigeria capital allowance. Nigeria adjusted profit less Nigeria capital allowance. We use that to get Nigeria total profit. Nigeria adjusted profit minus Nigeria capital allowance. I will use it to get my Nigeria total profit. Now, for the sake of time, let's look at a question. If to get Nigeria total profit, you can now compute your tax using the appropriate tax rate. You can compute your tax using the appropriate tax rate. Let's try to look at a question. Example question 1. Let's look at that. Somebody should help us read the question.
Flying Eagles Limited is a foreign airline company and has been involved in the business of transport passengers.
Please try to mute your audio. Oh yeah, continue.
And has been involved in the business of transporting passengers and goods to and fro Nigeria since 2010. The financial results of the company's operation for the year ended 31 December 2023 are as follows. Income from cargo freight out of Nigeria, 45 million. Income from cargo freight into Nigeria, 30 million. Income from passenger freight, 20 million. Income from passenger freight into Nigeria, 25 million. 120 million. Can you stress that? The total of 120 million, less expenses. Then wages and salary, 34.8 million. Depreciation, 6 million. Other expenses, 17.2 million. That's the total of 58 million. The net profit is 62 million. Additional information. Other expenses include income tax provision, 7 million. General provision for bad debt, 3 million. Donations to University of Abuja, 1.2 million. Donations to political parties, 2 million. Let me scroll, sir. Other disallowable expenses, 4 million. That's 17,200,000. Note, the Federal Inland Revenue Service, FIRS, has obtained satisfactory evidence that the basis adopted by the tax authority of the country in which the company is registered for the computation and assessment of profit or loss of companies engaged in airline business is not materially different from that used in Nigeria, and the relevant ratios has been certified by the foreign tax authority. You are required to compute A. Company's adjusted profit, 5 marks. Company's adjusted profit ratio and the depreciation ratio. 2 marks. C. Total profit of the company for Nigerian tax purpose. 5 marks. D. Tax liability of the company for the relevant year of assessment. Tax profit of the company for Nigerian tax purpose. Tax liability of the company for the relevant year of assessment. E. How would the company be assessed to Nigerian tax if the FIRS is not satisfied that the tax authority of the airline company's home country computes and assesses to tax the profits of an airline company on a basis not materially different from that prescribed by SITA? 1 mark. Total mark of 15.
Thank you very much. So this is a question of airline, shipping, and telecommunication company. This is one of the questions. So looking at this question now, we need to follow the step. Assuming we are asked to compute the tax liability, we are going to follow the step from one to the last. But this question, the examiner is asking us on a piecemeal. First question the examiner asks us is for us to compute the company adjusted profit. That company adjusted profit means they are asking us to get global adjusted profit. They are asking us to get global adjusted profit. This question A, the company adjusted profit, 5 marks. So they are asking us what is the global adjusted profit. How do we get the global adjusted profit? That is what the question is asking us. Like I said, we need to look at the step one by one. First step in this question is for us to get what? If we want to compute airline, shipping, and telecommunication company, the first step is for us to get what? Global income. Abi, what is global income in this question?
All the income from assets.
How much is the global income?
120 million.
120 million. That is the global income. Second step is for us to determine the Nigeria income. So from the global income, we can get the Nigeria income. Which one do you think is the Nigeria income from the global income?
The first one, cargo freight out of Nigeria.
Okay.
The
Any
third
other
one.
one?
The third one.
The third one. But the third one did not mention Nigeria now. The third one did not mention Nigeria. For the third one, is Nigeria income too. Why? Because we know that this company received two income. One is coming from cargo. Another one is coming from what? Passenger. Look at the first one. We have seen cargo freight out of Nigeria. Second is cargo freight into Nigeria. When you talk about income of passenger, the fourth one, they said income from passenger freight into Nigeria. That means the third one will be income from passenger freight what? That means that one will be what? Income from passenger freight out of what?
Nigeria. Out of Nigeria.
Out of Nigeria. So that means my Nigeria income is 45 million plus 20 million. That will give us 65 million. Now, the next thing we need to look at is The next thing we need to look at is global adjusted profit, which is question A. Question A is asking for company adjusted profit. That is the global adjusted profit. How do I get global adjusted profit? According to the formula, what is the global adjusted profit? Global income less allowable expenses. Global income less what? Allowable expenses. So in this question, we know the global income. How much is our global income? 120. 120 million. Now, what are the allowable expenses? Let's go to the expenses side. Which one do you think, out of the expenses given to us, which one do you think is allowed for tax purpose? First, wages and salary. Is it allowed or disallowed?
Allowed.
Okay. So that is one of the allowable expenses. Depreciation cost, is it allowed or disallowed?
Disallowed.
Disallowed.
Is disallowed. Other expenses. Other expenses. We are giving breakdown. We are giving breakdown of other expenses. What are the breakdown of other expenses? Let's check. They said other expenses include first, under the other expenses, income tax provision. Is income tax provision allowed or disallowed?
Disallowed.
Is disallowed. General provision for bad debts.
Disallowed.
Is it allowed or disallowed?
Disallowed.
Is disallowed. Donation to University of Abuja. Is it allowed or disallowed?
Allowed.
It is allowed because University of Abuja is a government school. Donation to political party. Is it allowed or disallowed?
Disallowed.
Other disallowable expenses. So that is the breakdown of other allowable expenses. That's 17,200,000. We are giving the breakdown. Out of that 17,200,000, which one do you think is allowed?
We identify only two. Only one second.
Which one do you think is allowed?
Only donation to
Donations to Abuja. University of
Donation to
Abuja.
University of Abuja. So if I want to compute my global adjusted profit, which is the company adjusted profit, my global income is 120. This is 120 less allowable expenses. First allowable expenses I have is wages and salaries. Second allowable expenses I have is donation to University of Abuja. So I will less the allowable expenses from the global income. That means my global adjusted profit, which is the question A, is going to be 84 million. And I also mentioned that there is another way you can get your global adjusted profit. There is another way you can get your global adjusted profit. I mentioned that. What is the other way?
net profits, then add allowable expenses.
Add what?
Disallowable, sorry.
Add disallowable expenses. In this question, what is our net profit? In this question, what is our net profit? Our net profit in this question is 62 million. This is our net profit. 62 million. Are disallowable expenses? What are the disallowable expenses in this question? Let's check.
Income tax provision.
Number one disallowable expenses is what?
Depreciation.
Income tax
Depreciation.
depreciation.
Depreciation is first. It's stated in the question. Why the second disallowable expenses is
Income
tax provision. The third one is what?
General provision for bad debts.
Yes. The fourth one is what?
Donations to political parties.
Why the fifth one is what?
Other disallowable expenses.
Other disallowable expenses. So all these are what? Disallowable expenses. So let's go and check. How do we compute our global adjusted profit using disallowable expenses method? 62 million is net profit. Depreciation, 6 million. Income tax provision, 7 million. Which other one? General provision for bad debt, 3 million. And donation to political party, 2 million. Other disallowable expenses, 4 million. At the end of the day, 22 million plus 52 plus 62 million. It will give you the adjusted profit, 84 million. The same thing like the first one. Do we understand?
Yes.
Yes, sir.
Second question said, compute adjusted profit ratio and depreciation ratio. In the format, if I want to compute global adjusted profit ratio, what is the formula? If I want to compute global adjusted profit ratio, I said, if I want to compute global adjusted profit ratio, global adjusted profit all
Over
over
global
income times 100 over 1. I have known my global adjusted profit as 84 million. What is my global income?
120.
120 million.
So 84 over 120 times 100 over 1. That will give us 70%. 70%. Second thing, they say I should compute depreciation ratio, depreciation allowance ratio. If I want to compute depreciation allowance ratio, how do I compute it? I will say my depreciation allowance ratio means depreciation charge all over global income. How much is depreciation in the question?
6 million.
6 million all over what?
120
Global
million.
income, 120 million. That one will give us 5%. That one will give us 5%. Now, number C question, the third question, said we should get total profit of the company for Nigeria tax purpose. I want to get the total profit for Nigeria tax purpose. And you know, second to the last step, I said I should determine my total profit. And also, if I want to get my total profit for Nigeria tax purpose, Nigeria adjusted profit less Nigeria what?
Capital allowance.
less Nigeria capital allowance. Nigeria adjusted profit less Nigeria capital allowance. I will use it to get my total profit for Nigeria purpose. So in this question, how do I get Nigeria adjusted profit? If I want to get Nigeria adjusted profit, one of the working notes, let's go to the working notes. Working note 3. If I want to get Nigeria adjusted profit, what do I do? Nigeria income times global adjusted profit ratio. Nigeria income times what?
Global adjusted profit ratio.
Global adjusted profit ratio. I will use that to get my what? Nigeria adjusted profit. Nigeria income times global adjusted profit ratio. I will use that to get my Nigeria adjusted profit. So my Nigeria income is how much?
65 million.
Why my Nigeria adjusted profit, global adjusted profit ratio is how much? 70%. So 70% times 65 million, it will give us, that means my Nigeria adjusted profit is 45,500,000. 45,500,000. My Nigeria capital allowance. If I want to get my Nigeria capital allowance, how do I get my Nigeria capital allowance? Nigeria capital allowance. How do I get it? The Nigeria capital allowance, like I said in the formula, if I want to get it, Nigeria income times depreciation ratio. Nigeria income times depreciation ratio. I will use that to get my Nigeria capital allowance. Nigeria income times what? Depreciation ratio. I will use it as a basis for getting my what? Nigeria capital allowance. Nigeria income times depreciation ratio. So that is what I will use to get my Nigeria what? My Nigeria capital allowance. Nigeria income times depreciation ratio. So I know my Nigeria income is 65 million and my depreciation ratio is 5%. 5% of 65 million. 5% of 65 million. That will give us 3,250,000. 250,000. 3,250,000. That will be my Nigeria capital allowance. Now, I've gotten my Nigeria adjusted profit. I've gotten my Nigeria capital allowance. Let me go back to question C. Question C said I should get my Nigeria total profit. If I want to get my Nigeria total profit, Nigeria adjusted profit, 45,500,000 less Nigeria capital allowance, which is 3,250,000. Once I less that, my Nigeria total profit or taxable profit is going to be 42,250,000. 42,250,000. That will be my Nigeria total profit or Nigeria taxable profit. 42,250,000. Question D said I should compute the tax liability for the relevant year of assessment. I should compute the tax liability for the relevant year of assessment. Since I've gotten my total profit, I can now compute my tax liability. My tax liability, first, I will compute CIT, company income tax. What will be my company income tax rate? Company income tax is based on total profit. What will be my company income tax rate? In this question, I used 20% as my company income tax rate. Why? Because my turnover is less than 100 million. In this question, my turnover is the Nigeria income. How much is Nigeria income?
65.
65 million. You can see that it is less than 100 million. So if your turnover is less than 100 million, the company income tax rate you are going to use will be 20%. Do you understand?
Yes.
Yes, sir.
Another tertiary education tax. So my company income tax, 20% of 42,250,000. It will give me 8,450,000. Why my tertiary education tax? That one will be what? 3% of adjusted profit. My adjusted profit, my Nigeria adjusted profit is 45,500,000. 3% of this Nigeria adjusted profit. What is the 3%? 3% of 45,500,000. It will give me 1,365,000. 1,365,000. That is 3% of the Nigeria adjusted profit. PDL, police tax. That one is 0.005% of your adjusted profit. 0.005% of your adjusted profit. So once you compute that one will give us 2,275 naira. So that is the tax you are going to pay in this question. Any other question on this? Do we have any question
Yes,
regarding
sir.
today's? Okay.
Sir, please, I want you to throw more light on why we are recording provision for bad debts and that tax provision as disallowable expenses. Because I'm always confused sometimes.
Okay, thank you very much.
And secondly, if we are also giving capital allowance in the question, we don't need to start doing the Nigerian income times the depreciation rate, right?
Yes, we don't need to do that. We don't need to compute depreciation allowance. We don't need to compute Nigeria capital allowance. The capital allowance given to us in the question is what we are going to use. So I'm starting from your second question.
Okay,
So
sir.
are you through with your question?
Yes, I'm true.
So let me go back to your first question. You are saying why, when we talk about provision for bad debt, I explain when I'm treating adjusted profit in my second lecture or third lecture in this diet, maybe my third lecture or fourth lecture. I talk about trading adjusted profit. I talk about provision for bad debt. I said provision for bad debt is divided into how many?
Two.
How many provision for
General
bad
and
debt we have?
specific.
We can say two. There is another one called bad debt written off. Bad debt written off is allowed. Specific provision for bad debt is allowed. But general provision for bad debt is a disallowable expenses. You don't provide for general provision for bad debt. It is disallowed. Only specific provision for bad debt, it is allowed. And bad debt written off too is allowed. General, it is clearly stated as a disallowable expenses. When you are if you go back to your notes, when you look at the list of disallowable expenses, one of the disallowable expenses I gave you earlier is general provision for bad debt. Income tax provision, you pay income tax, you pay company income tax, you are now using it as an expenses. Is it allowed? It is not allowed. If you pay tax, you cannot classify it as an expenses. Tax is not an expenses. Even, let's leave tax alone. If you go back to your financial reporting, is tax as part of your expenses in financial reporting? It is after you get your profit you compute tax now. You don't use tax as an expenses. Tax you pay last year, can you use it as an expenses this year? It's not. So income tax provision is a disallowable expenses. So I hope your question is answered.
Hello, sir.
Yeah.
Like this
Thank
police
you.
development level now. You mentioned 5%. Am I right, sir?
Which one?
The police development level after the tertiary,
Yes.
where we did our tax
I'm not saying
liability.
5%, 0.005%.
Okay. That's okay, no problem, sir.
Okay. So let's look at another question.
So, sorry, I want to also ask, does it mean that airline don't pay this internet tax, or what do they call that tax?
They pay NIGDA. Airline pay. Airline don't pay NIGDA. Sorry. Airline don't pay NIGDA. It is only bank
Okay.
that pay NIGDA. Bank, insurance
And
company,
telecommunication.
telecommunication, internet service provider. Airline don't pay NIGDA.
Okay. All right. Thank you.
Telecommunication pay NIGDA. Airline don't pay NIGDA.
All right, sir. Thank you.
Okay. So let's look at one more question. Question 2. Somebody should read question 2 for us.
Habib Limited is a foreign company involved in air transport business. Its aircraft are used for cargo and passenger freight between Nigeria and Spain. The audited financial statement for year ended 31st December 2023 revealed the following. Income from passengers flown from Madrid to Nigeria, 4,425,600. Income for passengers flown from Nigeria to Madrid, 13,397,250. Income from cargo loaded into aircraft other routes, 2,260,000. Income from cargo freight from Nigeria to Madrid, 13,375,000, which summed up 33,457,850. Deduct operating expenses, depreciation 460,000, staff salary 725,000, use of airport facilities 87,000, accommodation for airline crew 28,500, hotel bills for passengers 120,000, general provisions 35,000, which total 1,455,500. After deducting operating profit 32,002,350. In addition to the above, capital allowance we agreed with the relevant tax authority as 175% of depreciation. Required, compute the tax liability for assessment year 2024. Ignore minimum tax computation.
Thank you very much. So first thing for us to determine, what is our global income in this question? Global income.
Global income is 33,457,850.
So you need to write that in your working note. Working note 1, global income. Global income is working note 1, 33,457,850. Second one is Nigeria income. What is Nigeria income? From this global income, which one is Nigeria income among them?
Number 2, income from passengers flown from Nigeria to Madrid. 30,397,250.
And the last one, income from cargo right from Nigeria to Madrid.
Yes.
So these are
last
the
one.
two Nigeria income. These are the two Nigeria income. So my Nigeria income, working note 2, my Nigeria income is 26,772,250. That is my Nigeria income. Working note 3, I should compute global adjusted profit. Working note 3, global adjusted profit. My global adjusted profit, global income less allowable expenses. Out of these expenses, which one do you think is allowed?
Salaries is allowed. Airport facility is allowed.
Staff salary.
For crew is allowed.
Use
Hotel
of
bill
airport
for
facility.
is allowed.
Yes.
Those are the allowed ones.
So those are the 4. Staff salary, allowable expenses. Use of airport facility, allowable expenses. Accommodation for airtime crew, allowable expenses. Hotel bill for passenger too, allowable expenses. So you less them from the global income. That is working note 3. You less them from the global income. At the end of the day, staff salary 725,000. Use of airport facility 87,000. Accommodation for airtime crew 28,500. Hotel bill for passenger 120. All of them is 960,500. If you less them from the global income, your adjusted profit, your global adjusted profit is going to be 32,497,350. 32,497,350. Working note 4 is for you to get global adjusted profit ratio. How much is your global adjusted profit ratio? Global adjusted profit all over global income. Global adjusted profit all over what?
Global income.
Global income. So my global adjusted profit is 32,497,350. While my global income is 33,457,850. So times 100. That means my global adjusted profit ratio is going to be 97%. After that, working note 5 is for you to get your Nigeria adjusted profit. Nigeria adjusted profit. How do I get Nigeria adjusted profit? Nigeria income times global adjusted profit ratio. My Nigeria income times what? Global adjusted profit ratio. I know my global adjusted profit ratio is 97%. While my Nigeria income is how much? Is 26,772,250. So if I times that, I will get the Nigeria adjusted profit. And my Nigeria adjusted profit is 26,378.61. That is my Nigeria adjusted profit. If I want to get my Nigeria capital allowance, I don't need to use depreciation allowance ratio. I don't need to compute depreciation allowance ratio in this question, because the examiner tells us that if you want to get the Nigeria capital allowance, What is the rate are we going to use?
175% of
Of
depreciation.
depreciation. They have already give us this. We don't need to go and say depreciation all over global income times 100 over 1. We don't need that. We have already given how we are going to get the Nigeria capital allowance. So 175% of depreciation, I will get the Nigeria capital allowance. So that is working on 6. 175% of the depreciation, 175% of 460, I will get the Nigeria capital allowance. Nigeria capital allowance will now give me 805. Now, let's go to the requirement. The requirement is saying that I should compute the tax liability for the relevant year of assessment. The relevant year of assessment is 2024 year of assessment, preceding year basis. So the heading is Abib Limited, computation of tax liability for 2024 year of assessment. If I want to compute the tax liability, I need to get the total profit first. My total profit is Nigeria adjusted profit. How much is Nigeria adjusted profit? I've gotten that in the working note 5. 26,3,678.61. 26,3,678.61. That is my Nigeria adjusted profit. The next one is Nigeria capital allowance. What is my Nigeria capital allowance? Nigeria capital allowance, I've gotten that in the working note 6. That is 805. So if I minus my Nigeria capital allowance from my Nigeria adjusted profit, that means my total profit is going to be what? 25,198,678.61. From this, my total profit, I can compute my tax. If I want to compute my tax, CIT, I use 20%. Because the Nigeria income is less than 100 million, I will use 20%. 20% of the total profit, 20% of 25,198,678. It will give me 5,039,735. That is my CIT. My TET, education tax, 3% of adjusted profit. The adjusted profit is 26,003,678. 3% of it, it will give me 780,110. Why I will compute my police development levy. My police development levy is going to be 0.005% of the adjusted profit. That one will give me 1,003.8. So that is what the examiner asked us to do in this question. Do we understand?
Yes, sir.
So let's look at one more question. That will be the last question for today. That question is more conk than the others one we have done before. So let's look at that one. Assignment question 2. Somebody should help us read assignment question 2.
Modi Telecommunications Limited is a company based in Bologna, Italy, with a representative office in Nigeria. Its main business is in the area of private communication, which is carried out all over the world. The following data we obtained for the 75 million minutes recorded worldwide during the year ended 31st December 2023. Italy to the rest of Europe, 29,900,000 minutes. Italy to the Americas, 15,750 minutes. Italy to the rest of Africa, 6,750 minutes. Italy to Nigeria, 10,600,000 minutes. Nigeria to Italy, 8,800,000 minutes. Nigeria to the rest of the world, 3,200,000 minutes. The following additional information we are provided. Sir, please go up. Salaries and personnel costs, 57,840,000. Licenses and other operational costs, 157,910,000. Repairs and maintenance, 20,500,000. Depreciation of fixed assets, 134 million. General provision for doubtful debts at 2% of turnover. Income tax provision, 45 million. Calls are made at the rate of 5 lira for every 3 minutes. It was agreed that the rates of exchange shall be 4 naira to every lira. Required, compute the income tax payable on Nigerian operations for the relevant tax year. 14 marks. B, how would your computation be affected if you were informed that Nigerian income should be taken as 22.5% of turnover and the capital allowance is 35% of depreciation charged in the accounts? 6 marks. Thank you.
Thank you. So this is what we are asked to do. This is what we are asked to do. First, we need to follow the format. We need to get the global income. How do we get the global income? What is the global income here? How much is the global income? In this question, we are not giving the global income in value, but they give us the number of the minutes. When we add all these minutes together, that is the total minute for the global minute. We can convert all these minutes highlighted to Naira. If we convert them to Naira, we get our global income. So going to my working notes, we are asked that, look at a question. They said, how do we convert this minute to value or to Naira? We are given a note. Note 7. Calls are made at the rate of 5 lira for every 3 minutes. It was agreed that the rate of exchange shall be 4 naira for every lira. In this question, they have two currencies. One currency is called what?
Lira.
Why the other one is called Naira, Abi?
Yes.
We are in Nigeria. We have to report in Naira, Abi?
Yes, sir.
So now you have to first of all get lira before you get what?
Naira.
Now let's go and get our global income. Working note 1, global income. First, Italy to the rest of Europe. How many minutes? 29,900 minutes. Abi?
Yes. Yes, sir.
For us to convert it to lira, we will say 5 divided by 3. Because they said for every 3 minutes, they charge 5 lira. That means for every 1 minute, how much lira that they will charge is for us to divide that 5 by 3 times 29,900,000. For us to convert the lira to naira, they say 1 lira like this is equivalent to what?
4 naira.
4 naira.
4 naira. So we need to times it by 4 for us to get the naira equivalent. So Italy to the rest of Europe, 29,900,000 times 5 over 3 times 4. We are going to get 199,333,333.3. That is first one. Italy to America, the same thing. 15 million minutes, 15,750,000 minutes times 5 over 3 times 4. That one will give us 105 million. Italy to the rest of Africa. That one will give us 45 million. Italy to Nigeria. That one will give us how much?
70 million.
6667. Nigeria to Italy.
666,000.
That one will give us 58 million 66667. Why Nigeria to the rest of the world? That one will give us 21 million 33333. At the end of the day, if we add all the income together, how much are you going to get?
500 million.
That is your global income. If you don't want to do it like this, you can get your global income in another way. Go back to the question. How much is the total minutes recorded together? All this minutes, 29
million,
15 million, 6 million plus. If we add all the minutes together, how much is the total?
75 million minutes.
You can say, if you want to get your global income, 75 million minutes times what? Times over 3.
Yes,
times
4.
4.
5 over 3 times 4.
So you will still get 500 million as your global income. Do we understand?
Yes.
You will get the 500 million. Now, step 2 is for you to get Nigeria income. From the global income, which one do you think is Nigeria income? From the global income, which one do you think?
Nigeria to Italy. Nigeria to the rest of the world.
Nigeria to Italy and Nigeria to the rest of the world.
Nigeria to the rest of the world.
So Nigeria to Italy, 58,666,667. Nigeria to the rest of the world, 21,033,333. At the end of the day, your total Nigeria income is how much? 80 million. Global adjusted profits. I want to get global adjusted profit. What is the formula? Global income less allowable expenses. My global income is 500 million. What are the allowable expenses in this question? From the expenses, look at the expenses. Roman figure 1, salary and personnel costs. Is it allowed?
Yes.
Yes, sir.
License and other operational costs. Is it allowed?
Yes.
Yes, sir.
Repair and maintenance. Is it allowed?
Yes.
Yes, sir.
Depreciation. Is it allowed?
No.
No. General provision for bad debt. Is it allowed?
No.
Income tax provision. Is it allowed?
No.
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 That means we have 3 allowable expenses. 3 allowable expenses. Salaries and personnel costs, 57,840,000. License and other operational costs, 157,910,000. While repair and maintenance, 20,500,000. When you add all the allowable expenses, it's giving you 236,250,000. You less it from 500 million, which is the global income. That means you are going to get global adjusted profit of 263,750,000. That is your global adjusted profit. Now, step 4 is for you to compute global adjusted profit ratio. What is the formula for global adjusted profit ratio?
Global adjusted profit over global income times 100.
So global adjusted profit over global income times 100. So my global adjusted profit is 263,750,000 over 500, which is the global income, times 100. That means your global adjusted profit ratio is going to be 52,007,500. 52,007,500. Step 5, you compute Nigeria adjusted profit. How do you get Nigeria adjusted profit? Nigeria income times global adjusted profit ratio. Nigeria income times global adjusted profit ratio. My Nigeria income is 80 million times the global adjusted profit ratio. The global adjusted profit ratio is 52,750,000. That means I'm going to get 42,250,000 as my Nigeria adjusted profit. The next step is for me to compute depreciation allowance ratio. How do I get depreciation allowance ratio?
Thank God.
Hello, sorry
Can
for
you-
the network was very bad. So my laptop was switched off. So please, I'm sorry. So we are on this question. We want to get the Nigeria capital allowance. We have gotten that already, Abby. We said we want to get, where do we stop? Depreciation allowance ratio. We have gotten that 26.8%.
Yes.
Now, we will now get Nigeria capital allowance. If I want to get Nigeria capital allowance, what is the formula? The formula is depreciation allowance ratio times Nigeria income. Depreciation allowance ratio is 26.80 times Nigeria income, 80 million. That Nigeria capital allowance will give us 21,440,000. 21,440,000. That is the Nigeria capital allowance. From there, I will now go to the requirement of the question for me to compute the tax liability for the relevant year of assessment. If I want to compute the tax liability, the name of the company, Modi Telecommunication, computation of tax liability for 2024 years of assessment. In that case, my Nigeria adjusted profit is how much? How much is the Nigeria adjusted profit? 59,300,000 and
3,750.
Okay. My Nigeria capital allowance is how much?
46,900,000.
900,000. That means my total, yes, 46,900,000. That means my total profit is going to be what? 12,443,750. From this, I can now compute the tax liability. From this, I can compute the tax liability. What will be the tax? Sorry. This is the first one. The Nigeria adjusted profit is 42 million. Question A. The Nigeria adjusted profit, if you look at working note 5, is what?
42,200,000.
Why the Nigeria capital allowance is what?
21,440,000.
40,000. My total profit is going to be what?
20,760,000.
20,760,000. That is my total profit. So my tax liability, I want to compute my tax liability based on this. CIT, I use 20%. Why did I use 20% for CIT?
Because it's less than 100 million.
How much is Nigeria income? The Nigeria income is 80 million. Can we see that in the working note 2? Working note 2, the Nigeria income is 80 million. If you check working note 2, 80 million. It's less than 100 million. So 20% of the total profit, 20% of 20,760,000, it will give us 4,152,000. Why the education tax? 3% of adjusted profit. Education tax, 3% of adjusted profit. %3 of adjusted profit, 3% of 42,200,000. That one will give us 1,266,000. Apart from that, we also have police development levy. How much is that one? 0.005% of the adjusted profit. That one will give us 2,110 naira. Apart from that, since it's a telecommunication company, we will also have NIGDA. NIGDA is 1% of your adjusted profits. But in this case, this company will not pay NIGDA. Though they're supposed to pay NIGDA, but their NIGDA will be 0. Because in that year that you're supposed to pay NIGDA, your turnover must more than 100 million. Any year that you want to pay NIGDA, your turnover must more than how much?
100
million.
But in this question, how much is the turnover of this multi telecommunication? The Nigeria income. How much? 80 million. You can see that it's less than 100 million. They will not pay NIGDA. That is question A. That is question A. What is question B? Question B. Question B said, somebody should help us read question B.
Question B says, how would your computation be affected if you were informed that Nigerian income should be taken as 22.5% of turnover and the capital allowance is 35% of depreciation charged in the account?
This one asks us to recompute the tax liability. This question asks us to recompute what? Tax liability. They say if we want to recompute the tax liability, we should assume Nigeria income is how much?
22% of
22.5%.
Which turnover they are referring to?
Global turnover.
The 80,000.
Global income.
80 million.
No, it's the global.
Is the global. How much is the global income?
500 million.
They say this B part, they say we should assume Nigeria income is 22.5% of turnover. That means 22.5% of the global income. (22.5% of the global income is going to give you how much? 112
million
500,000. Second part in this B part, they say we should assume capital allowance is what?
35% of depreciation.
Capital allowance is what?
35% of depreciation.
35% of depreciation will be our capital allowance in B part of the question. Oh. In B part of the question, 35% of depreciation. So 35% of depreciation, how much is that? Depreciation is 134. 35% of it, that will be how much?
46,900.
So we have gotten that. We will use that to recompute tax. We are going to use that to do what? To recompute tax. We will use that to recompute tax. Since we know Nigeria income, if we want to recompute the tax, we know if we want to compute the tax liability, we have to say Nigeria adjusted profit less Nigeria capital allowance, you get total profit. From the total profit, you compute your tax. Now, since the turnover has changed, the Nigeria adjusted profit too will change in B part of the question. Do you agree with me?
Yes, sir.
How do we get Nigeria adjusted profit? What is the formula for getting Nigeria adjusted profit?
Nigerian income over
times
global adjusted profits.
Profit ratio. So in B part, how much is Nigeria income? Nigeria income in B part, how much?
112,500.
So Nigeria adjusted profit now will be, the global adjusted profit ratio still remain the same. 52.75 times the Nigeria income. We want to get Nigeria adjusted profit for B part. 52.75 times what? Times the 112,000. So how much are we going to get for the Nigeria adjusted profit for B part?
$59,346,43,750.
That is your Nigeria adjusted profit for B part. For B part, what is your Nigeria capital allowance? What is your Nigeria capital?
46.9 million.
You know how we get that?
Yes, sir.
Yes.
35% of depreciation, Abi?
Yes, sir.
Yes.
So when you minus Nigeria capital allowance from this Nigeria adjusted profit, that means your total profit in B part is going to be how much? 12,400,000 and what?
43,750.
12,443,750. Tax liability. I want to compute tax liability now based on this. CIT, what percentage am I going to use now? What percentage am I going to use? I'm going to use 30%.
30%.
Why?
Is above 100 million.
Because in B part now, the Nigeria income is now above what?
100 million.
100 million. So 30% of total profit, 30% of 12,443,750. That one will give us 3,733,125. Education tax, 3% of the adjusted profit, 3% of 59,343,750. That one will give us what? 1,000,000. That one will give us 1,780,312. Police development levy, 0.005% of adjusted profits. That one will give us 2,967.19. Why the last one is NICDA. Since the turnover is now more than 100 million, we can compute NICDA for this telecommunication company. Since the turnover is now more than 100 million, we can compute NICDA. So NICDA will be 1% of the adjusted profits. 1% of 59,343,750. That will give us how much? 593,438. That is the total tax liability for the B part of the question. So do we have any question regarding this?
Yes, I have a question.
Okay.
The capital allowance, the limiting it to the 2/3 of the adjusted profit, is it not applicable to these people? Because I noticed that the capital allowance reduce the taxable profit seriously.
It's not applicable under specialized business. The restriction is not applicable. Yeah.
All right.
Any other question?